Oh, snap. That is crazy. That is crazy that this whole time y'all could not hear me. I am so sorry about that. That's crazy, but I corrected myself. Yeah, I corrected myself before that happened. Let me see if any of my people on, because they normally. All right, so y'all didn't hear none of what I said just a second ago. So I apologize about that. We're still getting adjusted to going live on YouTube. But anyway, what I was discussing was basically indices, S&P, NASDAQ, US 30. So what we were projecting overall for our bias is that the market was going to start to sell off. We didn't know when, we didn't know basically how, but obviously, the market was going to find some major level of structure. So that's either support or resistance, you know what I'm saying, on a major time or a higher time frame. So if you look at the daily or the 4 hour, you can see that S&P started selling off, right? Now, even if the market is still, because make no mistake, we're overall bullish, but we know the market has to give us a little bit of equity back in order for it to continue rising. And that's what we were projecting. We were projecting that we were going to get a possible major sell-off in order to push us back to a better buy zone so the market can actually continue in its uptrend. But when you're looking at major levels of structure, you have to be able to spot that the market will probably react to that. So you don't always know this, but for at least for the most part, if you only see the market has been up to like a resistance area and you're now returning to it on a higher level, I mean a higher time frame, such as the 4 hour or the daily, expect the market to respect that. That doesn't mean that you need to change your bias, but just expect the market is going to respect these forms of structure. And we're seeing it play out today. Yesterday when we hit that, was that yesterday? Let me check. Yeah, that was yesterday that we hit 7K. What was yesterday? 28. Yeah, yeah. So yesterday when S&P hit 7K, that was the new high that was made. That was already priced in the market. But you can see as soon as it hit the 7K area, the market started selling off. And pretty much last night was your confirmation that yes, we are trying to push down a lot lower, you know what I'm saying, than this area over here. So that's not necessarily saying that we're in an overall bear market, but we have to have some type of give back. You know what I'm saying? The market was extremely bullish last year, and if you've been tuning in to our sessions, we've been discussing this. You know that we followed this all last year, that the market was just on a major bull run, no type of pullback, no type of correction that you normally would expect from the market, and I think that this is the year that we're going to get that. That's not necessarily saying that the market is going to come back to these previous highs that broke out of, but as far as support structures are considered, I would at least like the market to come back to these areas that, to me, it's missing information. This was basically when Trump said he was going to do another matter of fact, I think he said 100% tariffs on China, and then they reached some type of trade agreement. So there's a lot of data right here that I feel like the market is going to target in order to correct itself. And I think today is kind of like the first signs that we're seeing it. You see? Even with US 30, you know what I'm saying? It's remaining choppy, but as you can see, it created these two wick points. And the only information we can rely on is the move that it made. Now, I'm a firm believer, like as a trader, that anytime we see consolidation after a move, that's just a correction that the market needs in order to continue in that direction. So we did make two major spike ups, in the past 2 days with US 30. But as you can see, the structure, turn it to a line chart, the structure has closed below those levels. You know what I'm saying? And as long as price breaks this low currently right here, which is at 48,870, then yeah, that's our confirmation. I mean, for me, I think the confirmation has been there, but again, these type of volatility spikes, these were definitely induced in the market in order to try to knock sellers out or entice even more buyers to jump in. And now we have a little bit more clarity, especially on the Thursday. Thursday tends to normally be like this is the direction of the market. Even if it's going to change pace like the next week, this should be where the market is moving. the rest of the week unless we have some type of major news or God forbid President Trump says something. You understand what I'm saying? So for me, I was already looking at this area. We had took these sales, up here, but again, the market really wasn't doing anything. But this area, I was definitely paying attention to and looking for the market to start selling off from. As you can see, we remained like choppy because of that interest rate. Because the market was waiting on that interest rate decision. We had the decision made. It wasn't a cut, but again, it's still technical analysis. So even though the data wasn't changed, we have to rely on the technicals, and the technicals were already telling us that we're at resistance. So even if we're not quote unquote selling how most, traders try to gauge the market, we're at least going to respect this form of structure. Again, any type of major time frame that you're looking at, and you see like prices building, resistance or building support, look at the market to respect that. You know what I'm saying? At some pace. Every time we went up here, the market was respecting it. And I know like it was kind of, knocking people's heads off, but each time the market was creating like a lower high. You know what I'm saying? That previous high was lower than, you know what I'm saying? That previous high was lower than the last one. So if we're looking at just the sequence of a downtrend, I think we have it, especially today on US 30. All I care about is US 30, but I like looking at S&P and NASDAQ in conjunction with them because again, I could take opportunities, I could take advantage of if US 30 is telling me that it's trying to sell, I'm sure that S&P will start to make a move. And today were kind of confusion arguments because US 30 during London session, it did spike up. It had two volatility spikes. It had one at London and it had another one at opening bell. But if there's anything we learned the past year, when the market reacts off of opening bell, normally that's the opposite direction. And what I mean is that whenever you see like what we've been seeing consistently is that when the market buys up or sells off exactly at 9:30, opening bells at 9:30, then that normally tells us that that's a weak directional bias. And what it's trying to do is it's trying to hurry up and get to a level of structure as fast as possible so it can go ahead and make that move and then actually give you the true direction, which we kind of saw today with US 30. US 30 got extremely volatile last night, had a volatility spike up, and then during opening bell, volatility spike up. And then by the time we got to 9:45, 10 a.m., which we've discussed since last year, the market started selling off and it pretty much lined up with our analysis. You know what I'm saying? Again, these aren't like guesstimations. This is technical analysis. Totally different from gambling. You know what I'm saying? You're using actual information to form a bias. You know what I'm saying? And that's what we're looking at. And these are the results of us formulating our bias. You know what I'm saying? Even with the market seeming like it's going against us. But, like at this point, I think this is what we were looking for. We were looking for the sells. I wish I would have got into NASDAQ, but we were looking for the selling opportunities. And you see how like they're not as choppy as the buy back up. I was always like second guessing the buy up, but I'm still overall bullish on indices. I know that may be confusing to like some new traders. I'm still overall bullish on indices. The only thing we care about is the market pushing itself down to be at an adequate buying position. You know what I'm saying? Instead of us believing that it's going to take off from here. You know what I mean? So our first like point of contact would be this gap. I mean, not this gap, this consolidation area. Let me go ahead and y'all see this consolidation. So you see this orange zone right here. That's always, for me, that always indicates that that's consolidation. So basically anywhere, let's just do the middle. 47,500, 47,500. That would be our first area where we would have to, reassess to make sure the market is still pushing down to these lower levels. If not, that could be an opportunity for a buy zone. Make no mistake, the market loves to react off of these levels. So even if it's not necessarily buying up, it could be a volatility spike up to maybe test like a previous low that it breaks whenever it does break to the downside and then start continuing to push the market down. So for example, let's just entertain me. I'm not saying this is what's going to happen, but for example, This is consolidation. And then the low, if you're paying attention, would be right there, and I'll spot it. And obviously, it won't be as perfect as this. You know what I'm saying? Like, I wish it would be as perfect as this, but this is the low over here where my yellow line is at. Technically, that would be the low once the market broke up out of it. And if it did react off of it, that's not necessarily saying it's buying up, but that would be an opportunity for you to clear a move. You know what I'm saying? So indices like are definitely good opportunities in both directions. So it really doesn't matter. It just depends on like you not getting too crazy on what the direction is. You know what I'm saying? So trade the trend, you know what I'm saying? But with indices, as long as it's not like consolidating, like this range gave opportunities. As long as it's not consolidating, like we see, where's a bad version? Like this area over here, like this is definitely manipulation. And that's a very choppy move to for you to actually say like, oh man, the market was buying up, and then you see it got all choppy over here. So as long as the market's not choppy, like yeah, you could still take moves on both sides. You know what I'm saying? That would actually be hedging the market. So I would definitely take advantage of that, but don't get too crazy. Still stick with your overall bias and your overall trend. So let me look at it. Let me look at Bitcoin. Bitcoin, that's what we were discussing too. Like, come on, talk to me, traders. The- don't mind me. I'm hype right now. Don't mind me. But this is what we said. This is exactly what we discussed. If you looked at our video, I think that was from Market Forecast. If you looked at our video, and we've already been discussing this. We already made up our mind that Bitcoin was going to hit 125K. It hit 126K. Market started selling off from there. At this point, the market, you might as well look at this as a range because it's on the weekly time frame. Or I guess you could say consolidation because there was really no moves to take advantage of. So yeah, this consolidated, which exactly what we are discussing. We say what? Consolidation after a move normally means continuation. We need to write that down somehow. Like, remember that. But the fact that we see that Bitcoin is actually selling off, yes, man. Like this is it. It might seem like a bad thing because maybe you just started investing in crypto, but this is a good thing. I promise you, YouTube, this is a very good thing. Don't get lost in the sauce because you're being greedy out there and you're not seeing what you want to see immediately. This is kind of what happens, Joe. The market entices like people that don't understand or anybody that's like a late player to the game and you jump in the market and it starts going against you. You know what I'm saying? So I would say don't sell your assets or don't sell your tokens, but just look for better opportunities. And like I already said, I'm looking at Bitcoin to come down to at least 65,000 before I start making a determination if I'm looking for a buy opportunity. But I've already said this. We could see it go as low as 40K. You know what I'm saying? Back to 40K. Remember, in 2021, the market had like a major spike up and then it hit 65,000, right? That was the highest point that in 2021 that Bitcoin had reached. And then it dove down 90% of that move, putting us back at 13,000. If you want to round it up, we were probably like at closer to 15K from I think it was like 13 and some change. I can't remember the exact number. It's right over here, but I don't care to look for it. But anyway, basically 90% of that move. Could the market do a 90% return, you know what I'm saying, or correction? Yes, just think about it. Like just add your fib to it, right? Now, we're not going to aim for like a 90% correction. I think that would be insane. But again, this is cryptocurrency. It is very new. For it to come back to like 40K, 30K, 25K, I still think that's within the laws of like market structure. I don't think that would be something where it's like, oh man, we got to question cryptocurrency. I think that would be in the laws of like how market structure normally works. But of course, as an investor, you don't want to see it come that low, but we could see it come that low. Like I said, after we reach 65K, once we get there, then yeah, my next target would be like 55 and then 40, such and such, just because I don't know where the buy zone is, you know what I'm saying? But I do know that we are pushing a little bit further down. This was support at one point, That's probably the market's probably gonna say fuck that support and then push down lower, and then that'll put us at that 65K range, and then we'll make another determination from there. But like I said, I could see as low as 40K, but I think I'm stretching it because like I'm not, so keen on cryptocurrency. But as far as technicals are telling us, yes, 40K definitely seems possible. But this is what we've been discussing, traders. Like, I mean, the writing is on the wall. It's very clear. You just have to find your positions. You know what I'm saying? Like, just execute your entries. I know, like, it's the beginning of the year. So that's the one thing that I've been discussing with my community. It's the beginning of the year. You don't have to be so fearful or feel like you're getting your head bust open, you know what I'm saying, just because you're taking losses here and there. It's the beginning of the year. All that data that's supposed to be priced in hasn't even hit the market yet, you know what I'm saying? So you're definitely going to get more trending data once we get to like quarter two. But right now, you know what I'm saying, we have to deal with like the inconsistency of the market. Always expect, like with indices, that the market is going to probably return back to your entry, which means you have an opportunity like to trade, like to enter in a certain position three, four times before the market either slaps you on the opposite side or actually continues going in that direction. As you can see, there, even with this being choppy, there were opportunities. I don't recommend it, but I'm just saying for the conversation's sake. But yeah, everything looks clear. We just gotta wait for the market. Like, I wish I could go into detail about more, but we've already been taking these steps to put us in position to even catch this play. You know what I'm saying? So that's what we're doing right now. We're up. You know what I'm saying? Traders, we're up. Like, yes, the market went against us a little bit because we started formulating a bear bias early, but this was still always in preparation to put us at a buy zone. So that's all I got, traders. Let me see if there's anything else. I still think that we're pushing down for USD JPY and then the euro and the British pound once they correct. Now, with these gaps being there, like I could definitely see the market trying to attack these gaps. Y'all know if you've been following our channel and if you've been tuning in, make sure you guys hit that subscribe button. That definitely helps our channel grow. And I appreciate everybody who has been supporting currently. We're definitely going to try to do a lot more for all our supporters this year. So just stay tuned and keep passing on the information that, yo, I know a trading group that is fire because we are pretty fire over here. But anyway, this gap over here, I think that the market would probably try to uh, test that. If this isn't considered the test already, it's kind of like weird when it comes to gaps in regular Forex pairs because they're telling you the direction that the market is trying to go, but if it hasn't really filled it with the candle, which we normally like seeing it filled with the candle, but sometimes the market does these like weird movements where that could actually be a fill because it's wick to wick, you know what I'm saying? These are actually like touching each other. It's not like a lot of space in between. So we draw a zone. You can see that they're basically touching each other. So that can constitute as, you know, a gap filled, but I'm not sure, to be honest, yo. You know what I'm saying? Like, I'm not sure. But what I will say is that if the market does come down here, that's obviously it trying to fill the gap, and then that's your buy zone. You know what I'm saying? So I'm still bullish on Euro USD, GBP USD, especially since the market kind of cleared up our directional bias. You know, we were selling down here, and the market said, fuck you, you know what I'm saying, at this point. And not that that changed our bias, but it's like we were initially looking for buys, but when the market started selling off so aggressive, I was thinking that it was going to at least try to create support down here again. And it just said, like, nah, I created a trend and I corrected myself slightly and then I shot up. So once we get like some type of pullback, whatever correction that may be. Now, we already did say that the market was extremely bearish, that I don't expect like a pullback initially right here. I was expecting that the market was going to continue. I am surprised how bullish it got, but I was expecting the market to continue. How many days has it been? It's Friday. Oh yeah, it's Friday. So the gap happened. Yeah, the market gapped up. And again, you can almost say with GBP USD that it did the same thing, like it respected that gap. I'm gonna have to say that the market respected that gap because there was a wick with with Forex pairs, you can do like a wick fill. So based off of what I'm seeing, this looks like consolidation. Again, what do we say? Consolidation, what? After a move. So the market is consolidating after this bullish move. I want to see it to where it's a little bit clearer. Okay, that's a little bit clearer. So this is consolidation, but this brought us up. To me, this is like a fake out for the market to actually try to entice sellers in and then continue bringing the market up. So as far as we're seeing right now, we're on a bull run for the euro and the British pound. So yeah, it's about to get crazy out there. It's about to get crazy out there. So to me, this is the fight back for the EU and the ECB, anybody. So basically, European countries, not to mention the United Kingdom region, like them fighting back against Trump. You know what I'm saying? Them trying to be a superpower against the dollar per se. You know what I'm saying? But at the same token, when you look at the market on a higher time frame, a lot of these currencies, you know what I'm saying, across the water have been low. You know what I mean? So at this point, with them being low, you would expect that they're low. You know what I mean? We buy low, sell high. So they're low. They should be trying to actually push back up now at this point. This was the lowest point that the market traveled, and this was in 2022. So I think the market said, man, I'm done selling off. This is my buy pattern to buy back up. And I'm expecting us to continue buying up for a couple years. That's not saying that the dollar's going to continue going down, but I'm looking at like euro, British pound to get extremely strong against the USD. You know what I'm saying? Let's look at the DXY real quick. Yeah, DXY. I definitely think that we're going to continue pushing down at this point now. Again, this is consolidation after a major move. This was the manipulation and confusion that probably like bust traders' heads open, you know what I'm saying? And like I think that we're just going to continue going down until we reach either a previous high or this entire support, which I'm impressed that the market did do this. I didn't think that the DXY was going to do this, but there's a lot of gray areas that, you can't track everything. That's why the important thing as a trader is to remain focused. But that's all I got. As you all can see, the market has definitely been continuing to sell off. This is a great day for the trading community out there, I would like to think, especially for us that have been anticipating this move. So I'm excited for the rest of this year. I'm gonna continue to watch this market fall and give me some more profit, but I'll update everybody obviously on our weekly review, and I'll catch everybody on our next video with Digital Goats Academy. I'm Antoine Farrar. I hope everybody had a successful trading week, and I hope you continue to have a successful trading year. I will catch y'all later. Signing off. Peace. Enjoy, YouTube.